Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, a major price hike looms next week amid the conflict between Iran and Israel. The Bangko Sentral ng Pilipinas signals a more accommodative policy following a 25 basis point rate cut on easing inflation. We get more color and context from Bangko Sentral Governor Eli Remolona. And in our third of a series, President Bongbong Marcos pushes for MRT fare discounts for seniors and students. As tensions between Israel and Iran enters into a second week, Filipino motorists may soon feel the heat at the pump. The Energy Department warns of a major fuel price hike next week. Gasoline could see an uptick of 2 pesos and 50 centavos to 3 pesos per liter. Diesel might go up by 4 pesos and 30 centavos to 4 pesos and 80 centavos, while kerosene is projected to rise between 4 pesos and 25 centavos to 4 pesos and 40 centavos per liter. The Energy Department says the increase, which is expected by June 24th, is based on 4 days of trading data from the mean of Platts, Singapore. President Bongbong Marcos earlier said the government is prepared to roll out fuel subsidies for sectors that will be hit hardest by potential oil supply disruptions triggered by the conflict in the Middle East. As the markets widely predicted, the Bangko Sentral ng Pilipinas has eased interest rates anew with one more cut expected this year. The target reverse repurchase rate was reduced by 25 basis points from 5.5% to 5.25%, marking the lowest level in 2.5 years. 15 of 16 analysts polled by Business World last week already predicted this outcome. Since August 2024, the BSP has already delivered 125 basis point rate cuts. Both overnight deposit and lending facilities rates were also reduced at 4.75% and 5.25% respectively. The BSP also tweaked its inflation forecast. The central bank trimmed its inflation outlook for this year to just 1.6%, down from the previous estimate of 2.4%. While inflation estimates for 2026 and 2027 were revised upward to 3.4% and 3.3% respectively. With 3 policy meetings left this year, the BSP has signaled willingness to adopt a more accommodative monetary policy stance. But BSP Governor Eli Remolona acknowledged the central bank's delicate balancing act before making a decision.
Emerging risks to inflation from rising geopolitical tensions and external policy uncertainty require closer monitoring. Going forward, the BSP will safeguard price stability, ensuring monetary policy settings are conducive, sustainable economic growth and employment.
The BSP has already incorporated the possible surge of oil prices in its inflation forecast amid the escalating conflict between Israel and Iran. The central bank is not expecting pump prices to spiral out of control that could accelerate inflation.
Although in recent days there have been increases in the spot rate, overall, the possible increase in production of oil coming from OPEC plus countries, as well as the still muted demand from the global economy, could help stabilize oil prices below the highs that we have seen in the past year.
Spoke earlier this morning with Bangko Sentral Governor Eli Remolona, and here is what he had to say. What is the level of dependencies now with the Fed? I mean, the Fed kept rates on hold hours before you decided to carry on cutting by 25 basis points yesterday, June 18th. And the Fed, in fact, has paused for 4 straight meetings since the start of the year. While the Bangko Sentral has cut rates 5 times in 6 rate-setting meetings since August of last year. So are you now seeing more leeway acting independently of or from the Fed?
Absolutely. The dependency is much less than before. It used to be, as you know, Cathy, that the market expected at least a 100 basis point differential between the Fed policy rate and our policy rate. That differential is now down to about 90 basis points. But the market tends to look more at relative hawkishness and relative dovishness rather than just policy rate differential. So
Yep.
the dependency is much less than before.
Yeah, the relativity now is really front and center. Market analysts that I've had on this program mention a decoupling going on between the Philippines and the U.S. Inflation here is slowing faster than the U.S. Our GDP is still growing, albeit more slowly than in previous years, while the U.S. economy's GDP contracted in the first quarter this year. That is the first negative reading since 2022. So has the Philippines decoupled from the U.S.?
It has decoupled in terms of inflation. It has decoupled in terms of growth. But the world, including ourselves, is still affected by uncertainty. And there's a new source of uncertainty in the last week or so. That uncertainty means big ticket consumption items get postponed. You postpone buying a car. You postpone putting a down payment on a house. It also postpones investment, fixed investment. So that leads to a weakening of growth. But I think all things considered, our growth is still robust. It's still pretty good. Nonetheless, I think it's not as strong as it could be, which is why we felt we had part of the reason why we cut the policy rate.
Right. Growth is robust, albeit decelerating. It is a view that the World Bank shares. The 5.25 key policy rate is much lower now than that of Indonesia's and India's 5.5%. In the past, policy rates and bond yields in both India and Indonesia were much higher than the Philippines. Are you just as mindful of the pace at which they go in their rate cutting cycles? And in what way does that influence the timing and the pace of the Bangko Sentral's own?
It affects us a little bit, but not that much. For now, the main factors are our own fundamentals, the uncertainty that we're facing, and then the recent conflict in the Middle East, which leads to not just uncertainty, but a rise in oil prices. There's a risk that that Hormuz, the Strait of Hormuz, will be closed. That would be a big risk. That would mean much higher oil prices, and that would mean higher inflation in the Philippines. So those are the big risks that we worry about.
I'm going to pick up on the relative dovishness that you mentioned earlier. You did mention in the media conference that you're looking at the Fed's relative dovishness. So given that, what importance do you still assign the interest rate differential between the Fed funds rate and the Bangko Sentral's policy rate?
Yeah, the interest rates, including the dovishness and the hawkishness, have become less important today. The more important factor actually is the rise of uncertainty, which has had big effects or significant effects on our growth.
So it's the rise of this uncertainty that we're seeing in the Middle East. So would you say that an interest rate differential of, say, 50 basis point spread between the U.S. and the Philippines be ideal or appropriate?
I think there's no ideal number. It's relative to what else is going on. But I wouldn't be surprised if at some point the differential is down to 50 basis points.
And the latest escalation in the Middle East really is a huge uncertainty there, particularly between Israel and Iran, posing as a risk to oil. A major price hike here looms next week, which will exceed $4 or 4 pesos per liter. What would be the latest threshold then, the ceiling or the upper limit for global crude oil, for inflation to remain still within the 2 to 4% target of the Bangko Sentral?
We don't look at that upper limit. We look at a range of possibilities. We do scenario analysis today Cathy, in which we focus on particular risks, and the oil is one of the big risks that we worry about.
Right. I know that you've done away with assigning probabilities, mentioning those building scenarios. What is the scenario then on the inflationary impact of higher global tariffs as well as higher crude prices?
We have a bad scenario, if I may call it that, in which our inflation rate could exceed 5%. But we hope that doesn't happen, and we're carefully watching that. Our good scenario, well, I would say our central scenario says inflation will go up to around 3.4%.
Let's pick up on that bad scenario. What sort of elements, if you will, might contribute to 5% of an inflation rate here?
I think 5%, I don't remember the numbers exactly. Probably means Dubai crude goes up to 100, and then the peso depreciates sharply. And those two combined would have a very big effect on our inflation.
Well, what would you need to see to deliver 25 or 50 more? And what in the data would need to come out to keep on hold?
What we need to see is for the bad scenario not to materialize. So if things are going the way they've been going, I think we can continue to cut.
Now, Trump's tariff plan keeping long-term U.S. Treasury yields relatively higher, and some economists say it could possibly lead to a wider U.S. budget deficit. The higher U.S. government debt is also keeping long-term Philippine Treasury yields elevated. In what way are these concerns affecting the pace of the Bangko Central's monetary easing or pace of the rate cuts?
Yeah, there are significant concerns, Cathy. As you know, the way our debt is priced, they're priced in terms of spreads over the U.S. Treasury. So as yields on U.S. Treasury go up, the interest rates we pay on our own debt also goes up. So it affects us on the fiscal side quite a bit.
You know, Dev's Yusek Edilion had said that the Philippines' GDP needs to hit 6.2% in the remaining quarters to make at least the lower end of the government's growth target of between 6 to 8% for this year. To what extent is the Bangko Central's direction influenced now using benign inflation as a window or a lever to cut rates to shore economic growth?
What we try to do, Cathy, is to try to keep the economy moving as close as possible to its capacity. And that capacity has to grow because of investment. So our role is to keep the economic environment stable enough for that investment to materialize. In the meantime, in the short run, we're trying to keep our economy operating as close to capacity as possible. If we go beyond that, Cathy, it becomes inflationary.
And again, it lends credence to what you said earlier in our conversation. People are going to postpone buying cars, postpone making that mortgage. So apart from policy rate cuts, what is your guidance then in other monetary easing measures, such as future cuts in banks' reserve requirement ratios?
Yes. As you know, we've cut it down to 5%. That strengthens a transmission mechanism, actually, for our policy rate cuts. And we're looking at how much liquidity we're dealing with, the liquidity in the system, Cathy, and then we'll decide on whether we have room to cut the reserve requirement further.
My interview earlier this morning with Eli Remolona, Governor of the Bangko Sentral ng Pilipinas. We'll be taking a short break. When we return, we'll speak to RCBC Chief Economist Mike Ricafort on his thoughts on Remolona's remarks and a discount on MRT fare for students and senior citizens. A peek into the exclusive interview with President Bongbong Marcos comes after the break. Keep it here on One News.
Lahat po ng mapapanood ninyo sa susunod na mga eksena ay fake. Tandaan nyo po yan.
Ngayon, sobrang dali na gumawa ng fake na video. Muka, boses, pwedeng gayahin. Parang totoo, pero hindi.
Yung fake videos, pwedeng gamitin yan para manghingi ng OTP, password, o mag-spread ng maling impormasyon. Gaya nito.
Bro, legit to. High return in just 3 months. Wala kang gagawin.
Oo, boss. Bayad ka. Minimum lang 50,000. May 100,000 ka na bukas.
Oops, fake lahat to. Pati kami FAK.
Nanalo ako. Pero kailangan daw ng 1,000 pesos. Tsaka OTP. Anong OTP?
Inday, na-aksidente si sir, nasa ospital. Karon dayon nagpadala og kwarta.
Unsa? Ay, fake pala ako. Pati itong buong eksena.
Good morning po. May promo tayo ngayon. Tataasan natin ang credit limit ninyo.
Alright.
Pakisend po ng picture ng credit card nyo.
Oops, fake to.
Ingat tayong lahat sa fake. Gaya namin.
Lahat kami dito fake.
Welcome back to Money Talks. I'm Cathy Yang. Asian markets are a mixed bag in the first hours of trading, with investors assessing the situation in Israel and Iran. The Australian ASX 200 down by over 1/3%. South Korea's Kospi up by nearly 0.5%. And Japan's Nikkei 225 rises by 0.4%. U.S. markets were closed Thursday for the Juneteenth holiday. Stock futures point to marginal declines as investors gird for the possible U.S. involvement in the Mid-East conflict. The Dow falling by 1/4%. Both the S&P and the Nasdaq tumble by 0.25% each. Trading in the U.S. resumes later tonight, Manila time. Let's take a look at our own markets in the first moments of trading. Philippine Stock Exchange Index opens this Friday trading nearly flat in the first 48 minutes of trading, less than 0.1% at 6,358, up by about 1/10. PSI rebounded on Thursday by 1/3%. Most sectoral gauges were in the green, and the market breadth ended negative, with decliners edging out advancers. Take a look at the Philippine peso today. Tad stronger at the get-go, 57.22 the dollar. Peso sank to a 12-week low yesterday, Thursday, at 57.45 against the greenback. This is the 8th straight session that the local currency has weakened. Well, with us now for more is RCBC Chief Economist Mike Ricafort. Good seeing you again, Mike. Thank you so much for joining us.
Good morning, Cathy, and to your viewers. Nice to be back.
Yeah, and you know, I know that you'd been listening in to the governor's interview. What stood out for you in what he said just a couple of minutes ago?
Well, it's really he has signaled the possibility of the stance of continuously accommodative or still monetary easing stance, and this came as a pleasant surprise since yesterday, and he has been signaling the possibility of another quarter point cut for the coming months. Of course, it's contingent upon the data, especially in the Middle East, and it's really that proactive stance that really stands out, in the sense that inflation is still relatively benign, and of course they're watchful of what's going to transpire in the Middle East, because the risk in the Middle East now is escalation of the Israel-Iran war, especially if U.S. would be involved, and other countries would also be involved, the respective allies of both Israel and Iran, and and also the risk of potential supply chain disruption, especially at the Strait of Hormuz, and it's still a wait and see game. No? That's a challenge for it. It's still uncertain, and because the impact there is on inflation, oil prices.
And in fact, a looming price hike, as the Energy Department said, is going to begin next week, and it's 4 pesos of an increase, or even beyond that. How does this change the whole equation then, and how the Bangko Central is seeing where inflation goes next?
Yeah, true, Cathy, because the rule of thumb, for every $10 increase in the world price of oil, inflation could pick up at least zero point 0.2 to zero point 0.3 percentage point. So right now it's 1.3 for the month of May, and for the year to date it's 1.9%, the average from January to May. So should there be, that's the rule, that's a sensitivity analysis. So it's zero point 0.2 to zero point 0.3 at least for every $10 increase. So that's a variable that we have to contend with. And meaning to say, well, it's already up by more than $10 at $75, coming from $63, $64. Well, now exactly a week since the war started, and shortly prior to that, that has been the net change. So, well, if this is sustained, so that's the least that could happen. The headline inflation from year to date 1.9%, it's going to pick up to a little over 2%. That's still well within the BSP's inflation target, but the risk there, should there be an escalation, the story could be different. That risk of volatility, say, if it goes higher than, say, $80, so that's a time that to reassess, as the governor has been mentioning, that just assess the data and see if further rate cuts would be warranted, because that would
In
also
the
be
meantime, it's really a big haircut of an inflation estimate from 2.4%. He's pared that back to 1.6% for all of 2025. In what way then is this changing your own inflation forecast for the full year?
Yeah, I think that's realistic, Cathy, to see less than 2% year to date because of the higher base effects. A year ago, everything was higher, like the tariff cut on rice, the import tariff cut to 15% from 35%. That was since July. So, however, and we've seen the end of El Nino. That was June of last year, exactly a year ago, middle of June, and so everything came from a high base. Now, rice prices in the world market, still among the lowest in 3.5 years since November of 2011. And we have seen, of course, the maximum suggested retail price for rice being brought down gradually to really force down. Well, that's part of the part of the regulation, so to speak. Amid the market forces, and to ensure that there's indeed the lower rice prices are passed down to the consumers. And oil is another thing. Of course, the adjustment in wages. We have seen also another factor to contend with would be the proposed legislated wage hike, and there could be some potential inflationary impact on those. So, but these are offset by we're taking that proactive stance still for having dovish signals, because in view of the external challenges, potential slowdown in the world economy because of Trump's tariffs, the trade wars, the protectionist measures. So we all need to sandbag against all of those. And
which leads us to the other side of the equation, which is growth. Where does growth go from here? He did make a mention earlier that part of the reason why he cut rates was because of the need to shore up growth, because it's being subpar, still growing, albeit a little more slowly. BSP has had 5 policy rate cuts out of the 6 rate-setting meetings. Our GDP, the World Bank says, still robust, but still in a decelerating trend. Can we still hope for 6% for the full year, Mike?
Well, it's still possible, Cathy, but 5% levels, maybe a little less than 6 would be more realistic. We have seen that already, the adjustments of the multilaterals, the credit rating agencies, taking into account the Trump factor, because it's still uncertain on Trump's tariffs. Would he continue the 10% baseline tariff as they it's gonna the deadline of the 90-day pause would be July 9, and there were talks that he may raise it to 15%. So it's too uncertain. So the attitude is still wait and see from the point of view of exporters from all over the world, and before they their inventories, before they add up to capacity, before they make new investments or expansion plans. So it's going to slow things down, slower investments, slower global trade, employment, and overall economic growth worldwide. But here in the Philippines, we're not that much dependent on exports compared to our neighboring countries. The more developed ASEAN countries, their exports are like 3 to 5 times higher than us. So the bigger headache is on them. But indirectly, there could still be a slowdown. So that's why it's very important that balancing act, the need to, if there's that headroom, that leeway, that room to maneuver, to cut rates, to ease monetary policy. Well, other than the rate cuts, it's a total of 125 basis points cuts since August. So that's going to lower borrowing, financing costs, and that would stimulate economic growth. And try to shore up also. Try to. Well, we have seen consumer loans growing much faster, and overall loans twice as GDP at 11%. Consumer loans at 25%. So yeah, hopefully this would be an offsetting positive factor.
So is
to
that it?
shore up
25
growth.
basis point of a further rate cut in August, and that's it? Nothing more in
Well,
October and December?
Well, it's still possible that of the Fed, they signaled another 50 basis points cut this year. That just came more than a day ago in the U.S. during the last meeting. Another 25 basis points cut next year. That was downscaled from 50 basis points cut previously, and another 25 basis points cut by 2027. That would be a total of 100 basis points, and definitely the BSP would match that in as much as other central banks would do to maintain healthy differentials, and that would help prop up and stimulate economic activities by way of lower credit or financing costs.
All right. Well, I've maxed out your crystal ball predictions there. Thank you so much. Mike Ricafort of RCBC. I appreciate your insights.
Yeah, thank you.
The Transportation Department has announced a 50% fare discount for students on LRT1, LRT2, and MRT3 effective today. This discount also covers postgraduate students and is valid daily, including weekends and holidays. This is in line with the directive of President Bongbong Marcos to ease the daily struggles of commuters. The president signaled the move during an exclusive interview with News 5 at 1PH anchor Cheryl Cosim, saying the government was working to cut down commuting costs for students and senior citizens.
Naramdaman ko yan minsan, sumakay kami ng MRT. Ang talagang pagka nakapasok ka na, basta't yung kamay mo nandito, hindi mo na magagalaw yon. So kausap ko yung mga, tapos nakadikit ko na ganito. Kinakausap ko yung mga pasahero. Sabi, sir, ganyan talaga yan araw-araw. Alam ko, napaka-init, napaka-crowd. Yung init, okay pa lang yun. Wala namang problema, pawisan ng konti. Pero yung sikip, at saka yung hirap, tapos yung kahit na yung mga security check dati, kung ano na nagkaka-delay. Kaya tinanggal namin lahat. Tapos cashless payment na.
Yes.
Tapos yung 1+3 na ginawa namin para sa pamilya. And we are studying na yung estudyante mabigyan na malaking diskwento. Kasi I said, everywhere I go, ang senior at saka student, may diskwento malaki. 50%, ganun.
Kasi ngayon 20% ang ina-apply po ngayon. So gusto nyo mas malaki?
Mas malaki kasi yan those are the sectors of government na hirap of the society na hirap sa cash. Estudyante, walang pera ang estudyante usually. Yung mga matatanda, kaunti lang ang hawak nilang pera. So bakit pa natin pababayarin? They already serve the country, nagtrabaho sila ng buong buhay nila, dapat naman magbigyan natin ng konting benepisyo, di ba?
In the same interview, President Marcos also addressed the decision to put the EDSA rehab project on hold, saying it will burden motorists and daily commuters.
Yung nasa kotse ka, nasa EDSA, makikita mo 12:00 na ng gabi. Ang haba pa ng pila, nag-aantay ng bus. Tapos yun, pag uwi nun, gigising na 4:00 yun. Magtaantay na naman ng bus para makapasok na 7:00, 8:00. Yun na nga. Sinasabi, hindi pwedeng ganyan. Napakahirap na. Dadagdagan pa natin ng kahirapan. Sabi ko, siguro naman may mga bagong sistema dyan na hindi natin kailangan isara. O kung yung gagawin na, hindi 2 taon. So sabi ko, tigil muna natin, pag-isipan natin mabuti. Hanap tayo ng bagong teknolohiya. There are new technologies. And so, I'm very happy with my decision. Kasi mukhang kakayanin na hindi 2 taon 2 years ng pagdudusa. Hindi mo naman pwedeng gawin sa tao yun.
You can watch the full exclusive interview on the official pages of News 5, 1PH, 1 News, True FM, and the Presidential Communications Office. And that is it for Money Talks. I'm Cathy Yang. Catch us again Monday at 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great weekend ahead. See you Monday.